My current retirement allocation is so minimal that I barely even notice that it's gone from my paycheck. And with that, I'm on track to retire with over $5 million. In fact, if I were to stop adding anything to my retirement from now until I retire, I'd have over $1 million just from this one ETF. This ETF is VOO, VOO, and it mirrors the S&P 500 index fund. For those of you that are new, hi, my name is Nolan Govea, or Professor G as my students know me. I'm a professor that specializes in personal finance, and I do all of the research so that you don't have to. In this video, I'm going to cover how much money you can make by investing in this one ETF, and I'm going to show you that over 10 years, 20 years, 30 years, and 40 years, because I know that there are some of you guys that have 30 or 40 years till retirement age, but there are also a lot of you that are closer to retirement or that just want to retire early. So I'm going to give you all the figures and you can decide. The S&P 500 is an index fund that tracks the biggest companies in the United States and 500 plus of the best companies that we have. Those 500 plus organizations collectively account for about 80% of the stock market's total value. When someone says the market was up 5% today, it often means specifically that the S&P 500 went up 5%. Now on average, the S&P 500 has gone up 10% every year. For the last 10 years, it's actually gone up over 13%, but it's more accurate to say 10% when trying to forecast for the future. So how much money will you have if you invest only in this ETF? The average income in America is a little over $50,000, so we'll use that as our number. Now let's say of that $50,000 that you make, you put aside 10%. That's only $5,000, which is only $416 per month. Not a huge slice out of your paycheck at all. Now, if you were to put this $416 into VOO each and every month for the next 10 years, and if it continues to grow at an average of 10%, which it has for so long, in 10 years, you would have $80,638. In 20 years, you'd have $288,715. In 30 years, you'd have $828,413. And in 40 years, you'd have $2,228,249. So let me say that again. If you just put $416 away in 40 years from this one stock, you'd have over $2 million to retire on. Now, obviously, if you increase your income, it's only going to be more than that. I feel like we are shifting away from the old model of just having one career and just working up that corporate ladder and hopefully one day we get a raise. Nah, sis, I'm good. The model that I think is going to promote much more mental health and just happiness overall is going to be to have that career, average pay $50,000 a year, that's fine. And then also on the side, have a little side hustle. And hopefully this side hustle is something that you're passionate about or that you actually care about. If nothing else, it's something that you can do on your own time and that you can just make a couple extra bucks. So let's say you have that $50,000, you find a way to make just $100 more per week. Instead of putting $416 into VOO every month, now you're able to put $816 into VOO every month. And again, this is more similar to what I do personally. If you were to do that in 10 years, you'd have $158,175. In 20 years, you'd have $566,326. In 30 years, you'd have $1,624,964. And in 40 years, you'd have $4,370,797. So as we can see, if you just come up with an extra $100 a week, which is really only a couple Instacart trips or a couple Uber drives, and you could have over $4 million sitting there ready for you. So this amount of money is possible by investing in literally only one ETF, VOO, for the rest of your life. And I have 4 main reasons why this is the only stock that you could literally ever need. Number 1 is obviously that the S&P 500 is the best 500 companies that we have to offer in the United States. The best CEOs, the best teams with the smartest people, and each one of them is working super hard just for themselves competitively to be alive in this market. So they're doing all the work, we're reaping all the reward. Reason number two is that strong long-term growth. There's very few things that we can look at in the market historically that have always had about 10% growth on average. Seriously, over any 20-year span, the S&P 500 has not lost you money. Any 20-year span. And since this is going into a retirement, so you're thinking long-term, this is a very important stat for you to know. Number three, it's diversified. Anytime that you talk to any investor who's been investing for a while, they're going to tell you that you do need to diversify. It's important to not have all your eggs in one basket. And while this seems like one basket because it's going into one stock, it's really 500 baskets. Many different industries, many different types of companies, and so you're well diversified. Number four, and one of my favorite reasons, is that it's like getting an actively managed fund for free. Now, normally you'd have to pay a mutual fund manager or a hedge fund manager something like 2% of your profit for them to pick stocks to put together to make a fund for you. For VOO specifically, it's 0.03% that you're paying out, which is 66 times less expensive than going with a hedge fund manager of some sort. And for this small fee of 0.03%, the S&P 500 actively keeps companies in that are doing well and kicks companies out that are doing bad. So if they're actively keeping the best companies that only continue to make money, it only seems like a logical situation for you to keep this stock long term. Now you can invest in the S&P 500 in a couple of different ETFs, such as VOO, like I've talked before, IVV, and SPLG. Just make sure to look at the expense ratio and make sure that the holdings are the same as the actual S&P 500 index, and you'll be good to go. Good luck, my friends, and let's retire smart and wealthy.